Welcome back inside Arizona Daily Mix. Right now we're going to talk about the 5 things you need to know so you don't jeopardize your mortgage. Joining me from Homeowner Financial Group, this is a licensed mortgage professional. It's Joe Connor. Good morning, Joe.
Good morning. Thanks for having me.
Oh, nice to have you here. These are valuable tips that people need to know, and sometimes it seems like it's the most basic information, but a lot of times people do them anyway, and it affects them in the long run in a bad way. So first of all, let's talk about the ability to buy a home. You say this is a numbers game. What do you mean when you say that?
There's a lot of different numbers that your lender is going to take into consideration when qualifying you for a mortgage. It comes down to debt-to-income ratios, FICO scores, account balances, time on. There's a lot of different numbers that play a major factor into being qualified, and if one of those goes astray during the loan process, it could cost you the mortgage.
Really?
Yeah.
Oh my gosh. All right, well, let's talk about the things that people need to avoid and why. You were talking about the numbers game and some of the things like even just a job. So what are some of the things we need to avoid? So
time on job is a big part of being able to qualify for a mortgage. The lender pays very close attention to how long you've been on your job, the stability of your income. So some people think that because they're switching jobs and maybe making a little bit more money, that's a positive thing. Unfortunately, that's looked at as a negative if it's happening during the home buying process.
Okay, so you want to stay put.
Stay put. Have conversations with your lenders. It's very important that they understand exactly what your plans are. If you're thinking about making a move, do that before you apply for a mortgage.
Okay, so if you're still in the same job, but they're giving you a different position within the company, is that okay?
That's okay, as long as you're staying within the same company. That's the important part.
Okay. Well, let's talk about moving money around, because people they're like trying to shift their money so it looks like they have more money in one account versus another, so it looks good for the lending process, but is that not good to do?
It's not good to do.
Okay.
It's okay, but again, it's all about communication. So people transfer money maybe out of a 401k retirement account into their checking account. The thing with the mortgage industry now is it's very important to document any deposits or any moving of money. So to be able to document any transfers from one account to another, even as far as making deposits into your bank account, it's scrutinized very heavily by underwriters. So it's important that any deposits coming into your account are verifiable. So you can't just pull $5,000 cash out of your mattress, right, and make a deposit into your account, because that's considered unusable funds.
Oh, really?
Yeah, so it's very important that any deposits, any transfers coming into your bank account are verifiable. And if you're unsure, ask the question to your mortgage professional.
Okay. Conversation needs to be upfront, especially if you know that you have maybe family members that want to help you out by giving you some money for the house. You need to say, I'm going to receive a check from Uncle so-and-so. My mom's going to give me, so they know exactly where this money is coming from.
Very important, and you have to document that transfer. So if mom or dad or uncle is giving you money, it comes down to even getting a bank statement from them to verify that they had those funds available to give to you.
Well, let's talk about shopping, because people love to shop for their new home. They're like, I'm going to buy a new couch. I'm going to get, this, that, and the other.
Yeah.
But you're saying don't do it just yet.
Don't do it just yet. People see their new house, they get excited. It's a brand new garage. They need a brand new car for that garage. But unfortunately, it's bad timing. So any new credit, again, we talked about all the numbers involved. You have to be very conscious of your debt-to-income ratio. So if you're taking out new credit, not only could that affect your credit score, which could potentially prohibit you from getting the mortgage, but also your debt-to-income ratio. So if you're buying a car that's more expensive than the one you currently own, that could potentially push you over the limit and not qualify you for that loan.
Because now your money is going to be shifted in a different way. You're not going to be paying according to the rundown of the bills that you had prior. Now your money is like you said, moved, so that affects it to where they'll say, I don't think you can afford this on the regular, so you're not going to get the house.
Exactly, precisely. It's all about being able to qualify based on a snapshot of when you apply. So if any of those things change between the time of applying to the time of close, that could potentially change your loan approval.
Well, let's talk about changing credit, because some people do go and move their credit cards to like another credit card with a lower finance rate and all that. So is that not something you want to do? Is that looked at too?
It is. So the very last thing that happens in a mortgage transaction is literally the day of closing. The underwriter is going to pull an update on your credit. It's called a credit refresh, and they're going to take another new snapshot of your credit. It's going to show any new inquiries, any changes in balances, anything that's changed on your credit period. If anything has changed, then that file has to underwritten.
Oh my
and
goodness.
if it's something where it's a borderline where your FICO score changes a couple points, or if you transfer one account to another, that could affect your score as well. And again, it could prohibit you from being able to take out that mortgage. And that's a last second thing to happen. So
got to be cautious of all these things.
Very cautious.
There you go. Joe got you in the know of all the things you need to do so you don't jeopardize your mortgage. We want to get you into that home. If you want more information, go to homeownersfg.com and don't go anywhere. It's a Makeover Monday. Me and Abrielle are going to get our lips Valentine's Day ready when we come back.